Welcome, everyone. It's the Crypto Lark, and I'm super excited to have with me today Crypto Wendy O. Welcome.
Hey, thank you so much for having me, Sir Lark.
It is a pleasure indeed. Now, we're going to be talking about technical analysis today. So, we're breaking down some different indicators, things to watch for, tips, advice, all that fun stuff. And we've got Wendy here as an expert to talk on the topic. So, let's start off with what are some of the most common misconceptions about technical analysis?
Okay, this is going to be a fun one. So, everybody assumes that TA is 100%, that everybody that's posting charts or giving, saying price is going to do this, or that they're 100% right. So, TA is not 100% right. Yes, our indicators are math-based. They're formulated by extremely, extremely smart people that have put all these crazy fun math equations together. They give you these awesome indicators. TA is not 100%. We use it as a guide to essentially tell us where price could go based on our indicators. There's different rules, there's different things that people use, but at the end of the day, TA is not 100%. It works very well, but it's not 100%. So don't
If
ever just,
if only it
don't.
was 100%, we'd all be super rich. It'd be amazing.
Yeah, exactly. I mean, you and I would both have our own private islands. Everybody, everyone in crypto or everyone trading stocks or Forex or whatever would be millionaires. But it's just kind of a guide. It's just you kind of you use these indicators and you actually can put different indicators together. They say that if you can find three indicators that are running together, that's going to kind of dictate a really good setup or a really bad setup. So if you can figure out what works for you, then it does work. But even the top traders like Peter Brandt and all these really, really amazing people that have been doing it for 25 plus years, it's not 100%. Like they still have losses as well. So there's a lot of other factors that go into it too, is that a lot of people don't understand their emotions go into it. When you
Oh,
are trading
yeah.
with when you when you're trading with money, especially your own money, there's risk management that's involved. You don't take your mortgage or your rent money and be like, oh, I'm just gonna put this into Bitcoin because my indicators are telling me, and expect to flip it and go 100 long leverage or whatever. It's a lot. There's a lot of risk management that goes into it, and our emotions go into it. There's psychology behind it. There's all these different things, and also you need to really learn how to kind of take you out of it and kind of look at it non-biasly. And
Mhm.
I have some other stuff I can talk about too that helps with that.
Yeah, we're gonna get into all that stuff, I think. I think one of the things is you have to kind of, for lack of a better word, be cold when you're trading. You can't get like attached to like, oh, I got this. I'm attached to the logo of this coin, and I just love it so much. Like, no, you man, you're in here to trade and make money, and like
Yeah.
keep that in mind. Set targets, set stop losses. Know what your risk
Mhm.
profile is. Are you willing to lose 5% on this trade, or whatever it might be? And so that's really, really important to manage your psychology, like you said. And I think it's one of the key things that differentiates successful traders between people who don't. And you can look at the indicators and stuff all day, but if you don't know when to pull the trigger and you don't know when to get out, you can't manage that. That's really, really tricky.
Another thing too is that the market doesn't care about you or your feelings.
Yes.
The
Oh,
market,
it's so brutal, but it's so true.
and you know what? I used to bodyboard. My husband and I, we go to the beach a lot. We live in Southern California. And the rule is the ocean doesn't care about your feelings. Like if you're going to go in, especially at Laguna Beach, like we have really awesome waves there. If you go out on a day that's like, 4 to 5 and you're like, okay, I'm going to go ahead and take this wave, and you're not using risk management and you're not paying attention, you're going to get wrecked. And that's the same thing with trading. The market doesn't care. Just because you enter a Bitcoin or some shit coin at a certain price and you want to make a 50% gain, and you're like, okay, well, I'm going to set it here. The market doesn't care. Like it doesn't care what profit you want to make. It's going to decide what it's going to do based on support and resistance and all the other factors that go into it. So go into it, your trade, understand what's going on, understand what's going on with the market, and especially the market sentiment too, because that is a very that's a very important
Yeah.
thing. If the market is bearish, you're going to be lucky if you make a 10 or 20% gain on your trade. So though all those things are important.
Absolutely. And there's so many factors to take into it. For a regular, person works a 9 to 5 job and all these kind of things, and it can be hard to keep up to speed with all the things going on. So it's really about being patient too and watching for those opportunities. Don't feel you need to be out there, getting in and day trading 24/7, and then in the bathroom at work trying to make Bitcoin trades and stuff like that. You just chill out a little bit too.
Yeah, some of the best traders, like I'm not like the best trader in the world. I do a lot of the basic stuffs. I teach a lot of the basic concepts because those are really, to me, those are really all you need. But I don't trade every day, and sometimes I don't trade every week. If there's certain coins that I do like to trade because I like their patterns and I'm familiar with them, but I don't trade every day. Like there's a couple projects that I'm in that I bought pretty much at bottom, and they're not doing anything right now. So I'm kind of just sitting. I have, the stop loss is set, everything's set up, but nothing's really doing anything. So it's just, sometimes it's frustrating, but at the same time, I would rather make money than overtrade. Overtrading is definitely not good because, again, you can't control the market. Market doesn't care.
That's absolutely true. Yeah, and that's definitely something too. It patience in terms of just waiting for your trade to actually play out. You might think it's going to happen like instantly, instant money. Like no, you buy it, and like I've got some trades I've been sitting on for weeks, and it's like they're just moving sideways.
I mean, Bitcoin, our market right now, we're in a bearish market. I mean, there's stuff on the chart that's just telling me that we're going to continue to consolidate. There's no real catalyst that's occurring right now that's really going to pump the market. Yes, we might have, traditional finance coming in with the ETFs and back and all these things happening, but at the same time, there's not a whole lot going on. Like we kind of need mass adoption to happen as well. I know that's not going to happen overnight, but really we're just going to continue to consolidate and maybe, go back down to 61 or pop back up to 67, maybe even hit 7,000. Like, I don't know. I doubt we're going to hit 10K by the end of the year, but at the same time, just kind of write it out, look for trades, look for good setups, enter into projects that you like, or if you're just an investor or a hodler, really pay attention to FA and just kind of focus on scaling in right now and just being patient because our time will come. It's going to happen again. It's all part of the market cycles. I like to compare market cycles to gravity because what goes up must come down and what goes down must come up. Like the market's going to be okay. Crypto's not going.
Oh, exactly. And I know it's really hard for a lot of people who, they're experiencing this kind of for the first time, and it's like, I'm really scared, and I've invested in something that's gone down, and fundamental analysis is absolutely key. Make sure that you're actually getting into good things, and I think this plays through in my trading life as well. A small portion of my portfolio goes to trading. A lot of it's just kind of long-term holding and all this stuff. But in terms of what I trade, though, I like to trade coins that I actually like and understand the fundamentals of. I don't just like, everyone's talking about this random coin right now, and I don't really know what it is, but I'm going to try and run a quick trade on it. That's me personally. I'm a little more, maybe conservative when it comes to that.
If somebody is talking about something, especially on like all the social media platforms, don't ever take our word for it. Always go ahead and do your own research because there's a lot of stuff that goes on, and just always pay attention. Like there even like really good projects, sometimes news comes out that somebody didn't made a mistake or something happened. So just always pay attention because you don't know. I like to compare all these coin companies. I love small businesses. I'm bullish on entrepreneurship. I'm bullish on these people taking the jump. I love like 90% of our community. I love everybody that's nice. But, we're all trying to, essentially make careers for ourselves. And I believe it's like 80% of small businesses fail.
Yep.
Something like that. And
it's not a huge percentage.
Yeah, it's not because they're not good people. It's just because sometimes a business idea isn't executed correctly. There's all these different factors that go into it. So, use risk management and just pay attention to the fundamentals behind a project. And, I know that there's different communities for all these different coins, and people, like the different coins for different ideas. And that's why I'll interview almost any coin team just because of that, because I want to support the community and give these companies and give these projects an outlet or a platform for them to discuss their project. But at the same time too, just always do your own research. It's always good.
That's it. It's so super important to actually know what it is that you're doing. And I think you made a really, really good point about how many of these startups will fail. People invest in a lot of these crypto startups because they're startups, and they just think, well, maybe this is going to be here forever. And it's not like that. It's not like that at all. And the ICO has replaced the traditional corridors of the angel investor and all these things. And even those guys, when they invested, they assume, well, a lot of these are going to fail terribly and others are going to do well. And it's not that it's a scam. Everyone likes to throw that word around. Oh, it's a big scam. Like, no, they just executed their business plan bad, or they couldn't manage their finances, or the team broke up, or somebody got hit by a bus. It doesn't mean it was a scam. It just means that something bad happened.
Exactly. And that's normal. It's you don't see if every single person succeeded in everything that they did, we would be on one of those like old 50s like sci-fi movies like where we're all aliens or something like
Yeah,
that.
we all
Like
have flying cars and all that
yeah,
stuff.
we're all different. We're all unique human beings. We're all good at different things. Some people are just not good business owners.
That's right. That's right. Okay, back to serious technical stuff here. So, how to spot a breakout? What are some good indicators to look for when looking for a breakout?
Okay, so I'm actually going to, well, no, I won't share my chart yet, but as far as finding a breakout, well, actually I will share my chart. So I want to talk a little bit about, I want to talk a little bit about support and resistance because I think it is extremely important. Can you see my chart?
Yep, looks good.
Okay, perfect. So this is the Bitcoin weekly chart, but as far as finding a good breakout, I use support and resistance a lot. It's extremely, extremely important. Anytime I want to enter into something, I like things that are bottomed out. Currently with Bitcoin, we're kind of like chilling in this area here, not doing too much. But if I was going to enter, let's say into a long position, I would probably enter at my support, at my various supports, and I would probably assume that it's going to go long. I like this area here as a strong support to go long. I like this area here as a strong support to go long. I even like this area over here as a support to go long. So as far as finding setups, another good thing to do is they say with that if you can have 3 different indicators that match up that show bullish movement, that it's a really good setup. So for me, if I use support and resistance a lot, but I have to have like if I see one of these beautiful green candles, if I see them finding support at a support line here, and then my indicators are starting to pop off, that would be probably an ideal trade for me. In this situation here, I personally like my stochastic RSI is bullish because we're getting a bull cross. Price is heading upward. I'm getting some upward movement with my RSI, but my only issue is that the Bollinger Band MA, we're hitting some resistance here. So in order for me, like let's say I wanted to do a quick scalp or a quick trade, in order for me to feel confident, extremely confident that to go long here, I would wait till price closes at the top, or this candle closes at the top of this pink MA line here. So as far as spotting a good setup, I need to have I like to use support and resistances, and I like to have my candles the candle butts kind of be on top of that support and my indicators running upward. And that's going to tell me that price is probably going to pop off. It's probably going to go up and hit the next resistance area. And then I would probably take profits there and then, reset my stop loss and whatnot.
Yeah, support and resistance is definitely one of the key things I look at when I'm entering a trade. And I think you mentioned a really important thing there. Take profits. Take profits. Yes. Oh my God, take profits. Everyone out there, listening to this, when you're getting into a trade, have that strategy. Go in and say, okay, well, maybe I want to have Bitcoin as a long-term holding, but I'd like to get some of my money back. So if it's gone up by 10%, take some money out, whatever that percentage is going to be. I think that's a kind of a personal thing for a lot of people. What do you want out of it, right? Maybe I want 10%, maybe you want 5%, maybe next guy wants 50% of his, money back. So it's hard to say, but you definitely have to have that plan when you do go into it. So.
Yeah, that's another thing I want to touch on really quick is I do trading basics meetups, and I do them for free. I do them where I live out in LA. I go to San Pedro crypto space and I host these meetups and people come. But one of the things that I talk about is paper trading and journaling. I don't necessarily trade every day because sometimes I don't see a setup, but sometimes if I do a chart request, I'll go ahead and I'll journal. And journaling down your entry, your exit, your indicators, your reason why you want to enter or exit is extremely important to not only paper trading, because paper trading is really good practice to check your calls, but when you're actually entering into a trade or you want to go long or short or whatever it is, it's good to actually have them written down because I don't know how true this is, but there was studies shown that state that if you can physically write something down, like if you take notes in class, the information actually sticks with you better than it would if you were to type it into a computer. And it kind of holds you accountable because you have your trading journal and you can kind of go back and be like, oh, I screwed up there. This is what I did wrong. Or, oh, I did this. And you can kind of go back and look and see what went right and what went wrong and learn from that. So that's another really important thing about setups is write your setup.
That's a great piece of advice. And I think it's so important to do that because remember, it's your money. It's your money. You're putting it on the line, you know. So there's plenty of opportunities to play it first without actually throwing your money into the market, so to speak. Because, like we said earlier, the market doesn't care. It's just this cold, uncaring beast that just moves on.
Yeah, exactly. Perfectly said.
Yeah, the market. Eh? So, volume. Let's talk about volume because this is something that people talk about a lot when it comes to looking at a technical analysis. So, what should people understand about volume?
Okay, so if you don't have volume, then you're not, there's no liquidity. There's not, the market's not going to move. So volume is extremely important. A good way, I know I trade a lot of different altcoins, and I go use places like Crypto Bridge or Coin Exchange and Cryptopia, all these different random exchanges, and sometimes they don't have a lot of volume. Well, if you don't have volume, and you have like not, your market cap is not too big, sometimes you're not going to see a lot of movement. So if you want to enter into a trade and there's not a lot of volume, then you might want to think twice about it, because the chances of it hitting your target or filling your sell order might not happen, or it's going to happen extremely slowly. So volume is another big thing to take into account, as far as, and especially for a lot of these larger cap stuff. If volume, let's say that your indicators are doing really well, they're extremely bullish, but your volume is decreasing, I believe that would be classified as a divergence, and the trade is probably not going to execute, or the setup's not going to work out, because if your volume is not consistent with your indicators, there's a problem. So volume is important.
Yeah, it's super important, and especially when you're trading like really, really low caps, like you said. I mean, is there any sort of, I guess, lower end of volume where you look at and just go, nah, I'm not even playing down there.
Well, I mean, you could, I mean, I still do some, I like all that page 8 stuff. It's really fun. I run projects that people would be like, what the hell is that?
I've
But
never heard
that's,
of that.
yeah, I like all these. I have a lot of love for the crypto community, so I'm in all these really random projects, and sometimes they're not the safest. I don't recommend anybody try this at home. But I like all that kind of stuff. It's fun for me. But let me tell you, once you get your little pump and then it starts to decline, it's going to keep declining, and it's going to go back down to previous supports, because there's not a lot of volume, there's not a lot of liquidity, there's not a lot going on. So just be really, really careful. If you're not certain about something and you see something off with the volume, maybe you should just take a step back and not enter the trade. Sometimes I do that too, because I don't want to lose out on my grocery money.
Yeah. Yeah, there you go. Well, there's a lot of advantage to trading, especially doing shorter term trades on a lot of these low caps. You know, they can go up 20, 30, 40, 50% quite easily, where a lot of the big caps, they're moving 5%, you know, something like that. It's to see a week where Bitcoin goes up by 50%, like our heads would
Yeah,
explode. Like, what's going on?
yeah,
But for a
definitely.
for a low cap, that's just a Tuesday, you know.
Yeah. If you find the right one with enough volume.
Yes, this is of course the important thing to keep in mind here. What is so support and resistance? Probably your favorite indicator overall.
I use a conjunction. I'm going to show you guys really quick, just a couple things, because I talk a lot. Okay, can you see my chart okay?
Yep.
Okay, so I like resistance are your areas here, and resistance is basically an area where price goes up but cannot break up again, pass through. This is a really strong, or really a good example of resistance. Another way you can spot resistance is if you have I call them candle butts. If you have two candle butts touching up together, and they don't break up above this point, so this creates a really strong resistance. The same can be done with support as well. Price generally won't break below support. This is a really good support area here. Some other indicators that I like a lot, I love the Bollinger Band. The reason why I love the Bollinger Band is that it measures volatility really well. Anytime you have a sharp uptick here and you get a pinch on the Bollinger Bands, price automatically reacts and it'll go back down and it'll test your little MA line here. And then the same thing down here. If you get a pinch at the bottom Bollinger Band cloud, price will go, it'll act reversely and it'll go back up this way. Bollinger Bands are awesome. You can even, if you don't want to use other support and resistance lines, you can actually use Bollinger Bands as support and resistance, which is really cool. You can gauge market sentiment with the MA line, all kinds of fun things. Some other indicators that I like, I use my Bollinger Band support and resistance. I also use stochastic RSI. Stochastic RSI is really cool because it gives you these really easy features. like, let's say if anytime you get a cross, there's bull and bear cross. I call them bull and bear crosses. But if you get a cross, it's a confirmation that price, whatever direction price is going to go. This would be considered a bull cross because the blue line is above the red line, and we're going to get some upward movement here. Down here is your RSI. So the RSI is actually faster than the stochastic, and the RSI kind of dictates as to what the stochastic is going to do. RSI tells you which direction price is going to go, and it's very, very accurate. You see that we have a nice upward tick here. Price, these candles are following suit, and they're moving upward with the RSI. Another really cool indicator I will just go over really quickly is your Fibonacci retracement. Fibonacci retracement is awesome because it kind of automatically does support and resistance for you, and it's math based, and it's just freaking awesome. But yeah, Fibonacci retracement does a lot of support and resistance stuff for you. And this is another indicator that I use. If I wanted to do like a short-term setup here, I would go ahead and I pull it from the top to the bottom here, and it's basically going to kind of tell you where all your important support and resistances are. So those are some of the things that I use, and they work for me. But there's people that use other indicators, or that they use a MACD strategy, or they use Ichimoku Cloud. Everybody works differently. Try different indicators, find out what works for you.
Yeah, that's one of the best pieces of advice, I think, because there's so many different indicators. This is the thing. You go to TradingView, you're like, what are these like 50 different things, right? And it's actually kind of crazy, I think, especially for anyone who's new and starting to like, okay, I want to play around with technical analysis of the trading here, and like, oh my God, I have to learn all 50 of these things. Well, no, you don't actually learn all 50 of those things. You actually find a few of the really common ones. And I think you mentioned some of the, of course, the best ones. I use Bollinger Bands like all the time. It's one of my favorites as well. Bring in the Fibonacci and like just, find a few different indicators that you're comfortable with and you can understand how they work. And, use those. If you want to learn more in the future, well, you can add those in as you go. But find 3 or 4 that you're comfortable with. And there's a lot of information about like MACD and stuff like this. It's, pretty common stuff.
And you can also, if something doesn't, if you're trying to enter in a trade and let's say your RSI is not working for you, or stochastic, you can always remove them and add something else, or just go by, you can take some off or add more. It really just depends, whatever works for you.
That's it. So for beginner traders out there, for someone just getting started, what's your like 3 or 4 key pieces of advice that they can take away from this chat that we're having here for someone who's not traded before and they want to go out and start trading?
So there's 2 books I want to talk to you guys about. They're on eBay. You can get them both used for under $20. The Candlestick Charting for Dummies. This is really awesome if you're into spotting those types of patterns. On eBay, like $10. The Complete Idiot's Guide to Technical Analysis.
Excellent.
People, and you know what? People talk a lot. There's some people like on Twitter, sometimes they make you feel uncomfortable because they're all like super smart or whatever. You don't need to understand too much how these indicators, the math behind them, just know how that they work and figure out what works for you. When I have trouble, I read these books. I refresh myself on different things or different techniques. I journal. Every time I enter a trade, I journal. I do a lot of paper trading as well. Even though I do, I've been trading for, I've been in crypto for a year. I've been trading for, I think like 9 months or something like that. I still need a refresher, and I still paper trade. Paper trading is important. It's good to, to keep your mind fresh. Another thing I do is I do not trade when I'm tired, when I'm angry, when I'm hungry.
Also good advice.
Very good advice. Another thing too is that when I first started trading, I never joined a paid group, but I would do a lot. I would Google a lot of stuff, use Investopedia. I would look at other traders' charts, and I would kind of I used to practice charting Bitcoin because Bitcoin is pretty consistent. So what I would do is I would chart out. You can actually go to COINBASE or TradingView. All this stuff is free, but you can go and you can see other people's charts and what they're doing. So what I would do is I would go ahead and chart my coin out, and then I would compare it to somebody else, a more seasoned trader, and see what happened or whatever. And then TradingView has a really cool feature where you can look at people's charts and you can press like a little play button, and it'll take you from the day that they charted it, and it'll have their analysis at the bottom, and then it'll go all the way through so you can see how the trade played out. So there's a lot of education stuff there. You can get a lot of stuff for free. You just have to look, and you have to be willing to learn.
Yeah, you have to be hungry. You have to get out there and get it. And I think the important thing too to remember is that for all those people out there you see on Twitter or whatever, like, oh, we're big experts on this stuff. And you have to remember, there was a time when they hadn't done a single trade in their lives and they had to learn all this stuff too. And it's just a
Exactly.
question of applying yourself and actually getting out there and learning the information.
Yeah, you can chart Bitcoin. It can maybe put an hour aside a day and learn how to chart. Like you don't have, just because you're charting or you're paper trading doesn't, it's nothing bad. Like you're practicing right now. Like when you're investing your own money. You're not going to somebody who's managing your 401k or your IRA or whatever. This is your money. Like make the best of it, make the best of this experience, and take this time in the bear market to really learn what's going on.
Amen to that. This has been one of the great things about the bear market, actually. And a lot of people have been, oh, the bear market. No, it's actually a great time to accumulate good long-term holds. And it's also an amazing time to learn. Take some time off, learn, watch some YouTube videos, read some books, do
Yeah,
whatever
watch
it
your
is. And that's it. And get the information. Get the information because it's out there. And it's the emotions we mentioned earlier. It does become a bit trickier when it's like,
video.
oh my God, everything's going up massively. I have to just throw my money in now, and it's
No, no,
harder.
no. No,
Yeah.
you don't. Just be patient. I have a mentor and he always tells me there's going to be another bus. There's going to be another opportunity.
Yes. Yes. Amen to that. And there always is. There always is. For anyone who's ever come to me FOMOing on something like, yeah, just get next week's one. If you're not sure on it, just wait for the next one, man. Like there'll be plenty other buses going. There's thousands of crypto projects, and the markets are far from finished. So it's a important thing to remember is that all this trading is relative too. If you get a certain percentage, well, that's a gain, right? So that's the important thing to keep in mind. Whether you are trading at a certain price of Bitcoin or whatever, gaining is gaining, and that's the important thing to remember. I think when it
Exactly.
comes down to it. Now we're gonna wrap up here, but I want to know: do you have a prediction for Bitcoin?
Yes, my prediction for Bitcoin is not going to be very exciting. I think that we're just going to continue to consolidate until our weekly RSI decides to do something. If you go ahead and you look on the chart, I'm not going to show you guys. You guys need to go look yourself. But if you look on the weekly RSI, it's flat. It is completely flat. It's not doing anything. Until we get some actual movement and volume, we're not going to do anything. We're going to continue to consolidate in these the 6,000 area. I do not believe we will drop below 58 ever, maybe 57, but I don't think that's going to happen. I think that we're probably going to stay above 61 and consolidate in between 66 and 62 for quite some time.
Great, great. I'll take more. But it's a good level to be at, and yeah, it'll be interesting though. And this is where technical analysis. You can look at the charts and you wait for indicators to show you which direction it's going, right? But we have a lot of fundamental kind of events coming up that may be catalysts for actually pushing those indicators. And that's something a lot of people don't understand. They think that technical analysis is just the be all end all and this is what's going to no, it's a reflection. And if you understand the reflections, you can look around the corner a little bit and maybe see what's there. And that's powerful though. That's a lot more than a lot of people could ask for when it comes to, at least trying to think of where the markets might go. I mean, we have like BACT coming up on the 12th of December, like that could be something. Not saying it's going to be, but it might be, right?
Right. I agree. I totally agree. Just prepare. Now is the time to prepare, learn, get ahead of the crowd. There's going to be a whole new wave of people that are entering. Even if you entered into crypto today and you're watching this today, just keep reading, keep researching. My DMs are open on Twitter. Like if you ask me something, I will help you. If you want to comment on any of my stuff, I'll be there to help. Like I really want to help the community the way I can, any way that I can. I do free meetups. I do all kinds of stuff. Like I'm here to help. There's other people that are there to help. So
reach out. There's links down below for her Twitter and her YouTube, so go ahead and check those out and check out some of her content. She has really, really great stuff. So thank you so much for coming on the show and talking a little bit about TA with us today.
Thank you so much for having me. It was a pleasure.